Hi, my name is Alina and the topic of my essay is accounting and technology. The first part of the presentation talks about how accounting has changed over time with technology, and the second part talks about the emerging trends and their impact on the accounting profession and the accountants. My paper talks about the integration between the field of accounting and technology, history of accounting, emergence of CPAs and the auditors, technology and accounting history, recent accounting and relationship management software, technological tools and equipments that impact the accountants and our accounting profession, and I'm going to briefly talk about the negative effects and the positive effects, and then I'm going to conclude my presentation with my recommendation. History of accounting profession. Double entry bookkeeping system was introduced in 1494. The concept was devised by Venetian merchants. The Industrial Revolution and creation of corporations and multinational firms stipulated the need for advanced cost accounting and bookkeeping methods. Emergence of CPAs and auditors. During World War II, accountants were required to keep track of records and act as auditors. The concept of certified public accountants emerged in 1896. The CPA firms provided several partners to Washington war machine that ensured victory and led to innovations in the accounting and auditing profession. The events during World War II led to the need for more accountants to account for the money that was being earned and spent. The need arose to conduct audits of the defense contracts. More revenue was needed because expenditures increased, and so more taxes were imposed and collected. Technology and accounting history. Earliest use of an adding machine, the wire, and bead abacus was 2,000 years ago. In 1980, Herman Hollerith invented punch card and computing technology. Thereafter, mechanization of tax assessments and collections took place. Electrical operation of cash files took place. The application and use of machines and electronics in accounting took place. The need to increase speed, the demand for accurate results, and time constraints are the factors contributing to mechanization of tax assessments and collections. This has prevented under and overassessment of the property valuations and favoritism, which in turn prevented unrest and dissatisfaction on the part of the taxpayers, as the Journal of Accountancy suggested. Before the advent of electrical operation of cash files, CPAs were manually filing, sorting, and retrieving data in 1940s. In October 1955, Kermit realized that it was about time that CPAs started using computers developed for scientific and mathematical calculations for their own use. Accounting and relationship management software. Cloud computing software for bookkeeping, accounting software such as Peachtree, QuickBooks, Sage 50, etc. Audit software such as CAT, Blue Chip Standards, MS Office, Enterprise Resource Planning software, Supply Chain Management software, Customer Relationship Management software. These are the few software. ERP software has special accounting module that helps all the people in an accounting department to collaborate and efficiently communicate, for instance. CRM system help accountants in speeding up the proposal process to the customers. Areas impacted by technology. Accounting regulations impacted by technology. This includes move from GAAP to IFRS, labor laws, equity-based crowdfunding, accounting for assets, accounting for liabilities, example capital and operational leases, green accounting. All areas starting from collection of data, recording, processing, and reporting have been affected. Advent of technology has turned the world into a global village. A move from GAAP to IFRS as companies expand overseas. Due to emergence of multinational firms, the world is developing into a gig economy, which is a concept generated due to a move from full-time permanent workers to part-time, contract-based, and freelance workers. The existence of technological tools such as internet, video conferencing, virtual networks has contributed to being of gig economies. Equity-based crowdfunding has encouraged overseas expansion of firms. Equity-based crowdfunding allows unlisted private companies to raise funds through offering shares online and still form a part of the capital market. This leads to new reporting and compliance issues, which will require new accounting regulations. As sharing economies become more prevalent, there will be a change in the status of ownership and control, which in turn will require modification to the laws pertaining to assets and liabilities. As the world is becoming aware of the need to protecting the environment, the concept of green accounting has emerged, which has led to the need to devise standards and regulations to perform green accounting. Carbon unit measurement and management tools have been invented. Green accounting software are needed to calculate carbon ratings for the products retailers stock, and carbon accounting programs to calculate the tax based on the amount of energy company consumes. Data security. Confidentiality of the client's data is being compromised. Social engineering, kickbacks, and the use of shell companies are the techniques that leads to the manipulation of data and getting of data into the hands of unauthorized personnel. The solution here is to use cybersecurity measures such as two-step or multi-factor authentication to validate users accessing the data. Payment systems. Cash and money orders were the only forms of payment in the past. Advancements in technology introduced other modes such as direct debit credits, debit card, credit cards, check payments, etc. Electronic banking has given rise to e-commerce industry. Increase in the number and value of fraudulent transactions has increased, however. This has also impacted the balance sheet, assets and liabilities part of it. Accounting software is being constructed in a way that they are compatible with e-commerce and e-banking. Entry-level accounting systems are automating links with the banks. It has now become easier to forge checks and perform fraudulent transactions on the credit cards. Also, the flexibility in paying off the credit card balances and the time lags caused by check issuing and cashing date has affected the nature, that is long-term versus short-term liabilities, and the valuation of assets and liabilities on the balance sheet date, on the balance sheet. Furthermore, the possibilities of fraud as new technology hits the accounting profession leads to newer and stricter regulations. Robotics. Robots are human-like machines programmed to perform tasks. Robots can be used in the industries where accounting is more rule-based. Accountants need to anticipate the possibilities regarding the use and applications of robotics and devise regulations accordingly. Accountants will need to devise new methods for measuring robot performances and return on the investment. These machines are usually used in capital-intensive industries such as oil mining, manufacturing, and oil rigging industries. Artificial intelligence. AI is a software or machine's capability to behave like a human brain. So far, only limited intelligence has been fed into machines and software. Siri and Google are good examples of digital personal assistants, which respond based on the attributes they have learned about their users. Accountants rely on the expert knowledge built into the system. Auditors use smart software to automate several parts of the auditing process. AI applications help with compliance in the areas such as financial reporting, international tax, etc. Bank reconciliation is now automated. The Hey chatbot integrates financial information with Facebook Messenger. Virtual reality and the augmented reality. Augmented reality enhances the perception of real environment. Accountants are using virtual world Second Life to recruit trainees, attract clients, develop new lines of business, and organize meetings and online role-playing games. AVR and VR make use of equipments such as wired gloves and head-mount cameras. Do you think all this is leading to progressive de-skilling of the accounting profession? I think the machines cannot replace human intelligence and their creativity. They actually complement human brain power. They cannot also offer emotional intelligence. However, accountants should stay informed regarding the new developments and possibilities. Advantages of using technology. Some of the advantages include communication with the clients has become efficient and effective. Work from home opportunities allow more flexibility. There has been a significant fall in the number of visits to the accountant because clients can access their financial information from the mobile devices and tablets. MS Office applications have made it efficient to organize, sort, search, and analyze the data. Data entry errors have minimized because of the import feature that allows direct downloads from external sources. Audit software such as CAT has made reperformance and recalculation less time-consuming, lower capital and maintenance costs for accounting firms due to cloud computing. There is no need to invest in huge and expensive servers. The disadvantages, however, include the the disturbance in the work-life balance. Adopting technology is expensive, capital cost and maintenance cost. Threat to privacy and confidentiality, as talked about earlier. Advancement of payment systems has led to increased fraudulent activities, as talked about earlier. Going entirely paperless is risky because if the server crashes or is hit by the virus, accountants will lose all the important information. This is particularly a pitfall of cloud computing where no data is held locally and everything is on the server. Conclusion. Accountants need to reskill. With the new technology such as VR, AR, and artificial intelligence, accountants need to continually learn and master new skills. This would help them identify new technologies for themselves and also guide their clients. The clients usually refer to the CPAs regarding the pros and cons of the new technology that emerges, and CPAs these days not only provide financial and accounting advice to their clients, but also deal with their litigation issues, banking issues, insurance, and HR issues. Accountants must develop new ways to measure and value the benefits and pitfalls of adopting technology. The accounting profession will shrink as new software are built induced with finance expertise and self-learning. The CFOs will need to master technology as well as they master their accountancy and finance profession. By 2020, the audits are expected to happen in real time as per the ACCA Global. This last slide here emphasizes the urgent need for the accountants to be well equipped with the knowledge regarding the latest technology, if not well ahead of technology. As it says here, that this accounting position requires somebody who's tech savvy. Thank you.